All right, so China is being a bad friend, in my opinion. Now, I'm going to break down what I mean by this, but it has important considerations for this whole Trump-China trade deal. Now, look, Donald Trump has done a fantastic thing in the Middle East so far with Israel and Hamas, but I don't know if he's going to be as successful with the China trade deal, and it's not because I have anything against Donald Trump. It's because of what I'm seeing the Chinese say on a daily basis, while at the same time, Donald Trump is like, everything's great. Xi Jinping is my best friend. I mean, he doesn't say it, but to some extent, he's sort of like, we're great friends. Xi's a great man. We're going to have a great deal. It's going to be one of the greatest deals ever. By the way, have I told you how many wars I have solved? Tariffs? Anyway, every time Donald Trump does this, the Chinese dump on us. And I want you to see this directly. These are their words, or I'll talk it to you. Since I'm on an iPhone, I'm in Hawaii, I'm on a balcony, it's like 6 a.m. over here, I've been live for like 3 hours, okay? It's weird, actually. It's 5:56 a.m., which is weird because you're waking up at 2:30 in the morning to try to like help people out with the Meet Kevin Alpha report in the morning. It's crazy. Which, by the way, MP material, which will be related to what we're about to talk about, keeps going down. MP material is down another 6.7%. And the reason I sort of tangentially jumped into that after mentioning the Alpha report was because we wrote in the Alpha report, this runs to 100 and tops at 100. And it's down 24% since topping at 100. So if you're not part of that yet, join in the Meet Kevin membership at meetkevin.com. Okay, so after Donald Trump met the PM of Australia yesterday, we'll just put this all together here for you. The Global Times, which is basically your Chinese propaganda wing, puts out an article going, this deal cannot shake China's dominant status in the supply chains for rare earths in the short term. Basically, they're like, China is way ahead, and Australia should be careful. They're literally threatening Australia by saying that Australia should be careful because if they cozy up to the United States, they risk, quote, missing the big picture and suffering long-term losses if they keep being a staunch ally of the United States. This is like, I don't understand how that's supposed to reconcile with Donald Trump going, it's a great friend. We're going to make the greatest deal ever. Nobody knows deals, right? Like, it just doesn't reconcile. Like yesterday, Donald Trump's like, we signed an F-35 deal. We have the greatest aircraft ever. And then what happens? You've got Australia, which violates, apparently, allegedly, China's airspace, and China runs news headlines about this violation. Now, China is actually alleging that that was done on purpose to show that Australia is trying to align with the United States, or at least that's how China sees it. And so China's like, hey, Australians, you guys are going to lose us as a friend if you cozy up to the United States. Just this morning, the Chinese are begging the Europeans to partner with them. Just look it up, China-European video conference calls. This is common. China is trying to get everybody on their side in a sort of an us versus them matter. But it doesn't reconcile with this idea that we're actually going to get a good trade deal on November 1st. So that isn't going to be not a bullish catalyst. This is actually going to be a negative catalyst, right? So this is also very interesting. As is classic, Donald Trump announces these sort of deals, and most of the time these deals are frameworks of deals, sort of concepts of plans. And they eventually, hopefully, evolve into something. Unlike the healthcare plan from Trump. Oh, the MAGA people are going to get pissed for me saying that, but whatever. So China writes this, without revealing any details about that plan, he claimed that within a year, we'll have so many critical minerals and rare earths, you won't know what to do with them. China then suggests that the United States does not have the processing capacity, and neither does Australia, to actually pull off these rare earths, because they call it an extremely high technical threshold for rare earth purification. China, by the way, MP Material used to sell the vast majority of their rare earths that they raw collected to China. That's how they made most of their money, is they dig the rare earths and they'd send them to China because they can't process it in the United States. Now, the idea is that, with the government equity stake in MP Material and, maybe a 5-year time horizon, MP Material will catch up. But a lot of people are like, wait a minute. What'll actually end up happening is you'll have China just continue to advance, and they'll still be way ahead of us. In fact, here, China is one of the countries mastering the most advanced technology in this high-precision purification technology and achieved large-scale production. Now, obviously, it's Chinese propaganda. But you have to understand what they're doing, is they're basically saying, hey, this is us versus them, okay? If you partner with the U.S., you're not partnering with us. we have the technology, you don't. And they're right. You have to also give the credit where credit is due. They're right. We don't have the production capability right now. Then China, this is the propaganda part where they go, they cannot shake China's dominant position in the rare earth supply. But this reminds China to accelerate its own reserves of critical resources on a global scale. So they pick up on us saying we want to de-risk from China as evidence as to why they want to keep trying to get ahead of us. Then they totally dunk on us. How is somebody who's trying to partner with China or with Donald Trump to make a deal, how do they write stuff like this? The submarine deal that the United States partnered with Australia on, even if it ends up getting approved, will probably not be delivered on time, considering the United States' manufacturing capacity can hardly meet its domestic needs. Bloomberg in September 24 reported that the U.S. Navy's new Virginia-class submarines slipped 2 to 3 years behind schedule and are projected to run $17 billion over their planned budget through 2030. So, in other words, I mean, obviously we're looking at this as the propaganda wing of the Chinese, but this is what they're saying. This is in addition to them dumping on us yesterday. They literally call what we're doing, quote, Band-Aid diplomacy. They're dunking on us hard. This comes at the same time as you've got the economists saying so far markets are weathering the loss of confidence. However, there is a red flag in markets right now if you look at shares of companies that are called business development companies. They're kind of like REITs, but for not real estate, rather like business loans. And one ticker you could look up is Main, M-A-I-N, like Main Street. It has a dividend yield of 5.28%, but it's tanked recently from, it's tanked about, 15-ish% just on this sort of First Brands news. And a lot of people are of the impression that this is going to keep tanking because people are now nervous that things that are supposed to be AAA rated really actually aren't AAA rated. For example, you look at what Bloomberg is reporting, that investors are pulling cash from CLO ETFs in the biggest outflow since April. So CLOs are collateralized loan obligations. Apparently, these were getting inflows of $421 million over the past year every single week. Last week, $516 million outflow, which is a delta of $1 billion. And I mean, I was joking in the live stream this morning. I'm like, man, if I had to make a 2008 fund, I would probably name it something like the Janus Henderson AAA rated CLO ETF that actually exists. Apparently, they invest in the highest rated CLO bonds. These collateralized loans, it so much reminds me of 2007 and 2008, but whatever. Scary. This comes on top of, obviously, there's reporting that, the longer this government shutdown goes on, the more economic damage we're going to cause to our GDP. In 2018, the government shutdown cost the government about a little less than 0.1% of GDP per week, which means that every 10 weeks takes about 1% off of GDP. And part of that is because we actually still have to pay people for not working because we back pay them, but then a lot of these government workers who are furloughed, they didn't do work. So we lose twice. We're not saving the money because we still have to pay the people when they come back to work, but then we don't get the productivity. So that's why GDP ends up taking a hit, apparently. So 10 weeks, I would guess, the shutdown started October 1st. I would guess this is probably going to be done by December 15th, which would be a 10-week shutdown. Takes 1% off GDP. Not great. Now, AI has been propping up GDP above that, but now you're getting some red flags. Look at what's happening to Google today. Google's down 5% because of the rumored release of Operator, which will be OpenAI's, it's down 3% now, so it's bobbing around. But there's talk that OpenAI is going to release the Operator browser, and this is leading Google to sell off. Now, in fairness, it's basically at all-time highs, so it's like, who really cares? But part of this is because people are nervous that, Google's search mode gets absorbed. But also consider this. TechCrunch had a great article. They talked about at GPT, download growth is slowing down for the app. They talk about daily average time spent on the app is down 22.5% since July, and average sessions are down 20.7%. This indicates users are spending less time in GPT and are opening it fewer times per day. Now, there's this idea that, maybe it's going down because people are getting answers more efficiently, but it's not just that time is going down, but it's also that the number of sessions are declining, right? And so the idea here is that because both are going down, people are not only putting in fewer queries into GPT from its peak this summer, but they're spending less time in the app. So TechCrunch, they could be wrong, but they're kind of arguing that like maybe people have kind of found their way. The people who like Perplexity use it, the people who like Gemini, they use that, the people who use GPT, they use that, but now we're capping out. And then the question is, if we're capping out over there, what does that mean longer term for the AI trend? Well, now there's literally a report that NVIDIA is going to issue loan guarantees to OpenAI, which is crazy because NVIDIA is going to invest in OpenAI, and what is it, for every gigawatt of power centers that are opened up, NVIDIA is going to essentially unlock $10 billion to OpenAI. But now, OpenAI is going to turn around and use that to buy NVIDIA chips. Some of these are going to be loans. NVIDIA is now going to backstop, from what we're hearing, some of NVIDIA's some of OpenAI's loans. Now, guaranteeing loans works great when the market is going up. But what happens when all of a sudden the market goes down? And all of a sudden OpenAI stops buying chips, or they stop generating revenue, which, mind you, OpenAI is spending like $100 billion over the next 5 years on investments, probably honestly a lot more on infrastructure. You're probably looking at closer to half a trillion dollars are sort of the projections from Sam Altman. And so they generate revenue of about $13 billion per year. So you're losing money hand over fist, not even including the investments. You include the investments, it's insane. But yeah, 8 hours ago, NVIDIA discusses loan guarantee for OpenAI, guaranteeing some of the loans OpenAI is planning to take out to build its own data centers. That's scary, because it just means like we're getting to that phase where people are getting so nervous about credit markets and debt. Part of it could be related to China, that people are saying, all right, if we're going to lend to OpenAI, we need a loan guarantee. We need NVIDIA to guarantee it. And let them put their $4 trillion market cap behind this. And it suggests we're kind of getting to the last innings of the run here. Now, that's not to say that things are going to fall off a cliff anytime soon. Obviously, the last couple days have been great. We were very optimistic in the Meet Kevin Alpha report on Friday and Monday. Less so today. Not very optimistic today because a lot of people get nervous before Netflix earnings. It's very common. Still bearish MP material right now because we capped out at 100. And I'm a little under the weather too. Sorry about that. But hey, shout out though to the Meet Kevin Alpha report. Still putting it together. So if you want it, you still get it. Go to meetkevin.com, sign up, use coupon code Schumer Siesta. Probably gonna expire that coupon code soon. I don't actually think the government shutdown is gonna end until probably either before Thanksgiving or after Thanksgiving. Like right around then is when I think the shutdown ends. Because remember, Republicans, this is my opinion, Republicans want to solve the healthcare issues because they don't want to be branded as the face of, hey, you increased healthcare premiums for everyone. And Republicans are like, oh, just pass a clean resolution and we'll debate healthcare later. They know Democrats won't go for that. So they get their shutdown. They get the opportunity to delay jobs reports and data collection and fire a bunch of people, which is what Donald Trump wants. Donald Trump invites everybody for dinner to say thank you for being so unified. That was yesterday. To all the Senate Republicans and otherwise, which is not a surprise. And come around Thanksgiving, right before or after, Trump will be like, all right, we did the work we needed to do. Let's go ahead and give them their health care, and it'll reopen. That's part of, the Trump 4D chess. But this is all coming at the same time that this China deal, I know Trump is talking really optimistically about it, but based on what China's saying, man, I'm much more nervous than they are, or than markets are about this China deal. I actually don't think China benefits much from doing the deal with us because they want this to be us versus them. They want people to partner with China because they make fun of our manufacturing capacity every chance they get. They make fun of our economy. They make fun of our government structure, our capitalistic structure. They make fun of everything they can to bag on us. So I think they see us as the enemy. That's scary. But the good news is you can get yourself an ally by going to meetkevin.com. And we'll see you there, folks. Appreciate y'all. And check out Reinvest. That's the doing business as for House Hack. So just go to househack.com or reinvest.co Read the offering circular, and you're always welcome to invest. You get 5% yield through conversion. You get all the upside of the stock. We're like a little $100 million startup, and we think kind of like Beyond Meat. Beyond Meat was like $60 million. It got so low. We looked at this in the Meat Kevin membership. We're like, man, this has meme potential. Like, his revenue keeps going down, but it has meme potential. Dude, the thing like 2.5x. It's crazy. But anyway, I think we're a little small cap with really good assets. $80 million of assets, real estate cash, no bank debt, a little bit of bond debt, and a convertible. And we're really excited. So if you want to check it out, go see our AI website now, which is really cool too, with what we're going to be launching soon here. So go check that out over at reinvest.co, or just go to househack.com. It'll redirect you. Thanks, folks. Bye.